So the Bank of Canada is standing steady on its key interest rate at 2.25%. We have seen a marginal rise in inflation, but unemployment was also up in December. Policymakers said back in October that borrowing costs were at about the right level to support growth while keeping inflation near the 2% target. And we're also, of course, later today going to get an interest rate announcement from the Federal Reserve. Let's check out shares in CGI, the giant provider of ET services based in Quebec. Governments around the world are a major customer for them. And they also, of course, they say that they're getting a boost here from more and more artificial intelligence work. You can see the stock actually down, hitting a new multi-year low, as is today a CSU, Constellation Software, and Thomson Reuters. And those are old line data bank software companies that investors fear will be hurt by AI. Let's get back to the Bank of Canada standing pat on interest rates. Our guest is a mortgage broker. He says this news will be disappointing for millions of Canadians with variable mortgage rates and home equity lines of credit, as they are priced off the Bank of Canada interest rate policy, often linked to the prime rate. We're joined now by Ron Butler, mortgage broker at Butler Mortgage. Ron, thanks very much. Just remind us, I know it's hard to get specific figures, but are variable rate mortgages, just to narrow in on them, are they a huge portion of the mortgage market still?
Yeah, they make up about 30% of the entire mortgage market. So those variable rate mortgage holders have been crossing their fingers, hoping for more cuts. And unfortunately, today it did not come through.
And can you just remind us, have rates, with the cut of interest rates, variable rates have come down over the past year?
Yeah, variable rates came down significantly in 2024 and 2025. And as you know, the pause, Tiff Macklem, the Bank of Canada governor's pause, started in November, and it continues now.
Do you think Tiff Macklem pays much attention to variable rates and variable rates on home equity lines of credit? Is it a big consideration for the Bank of Canada when they think about interest rate changes?
I think they consider it, but they consider it in a very small way. Their belief is they've come down from the high of 2023. They've come down 50% from the high. So in their way of thinking, they've done a pretty good job of getting those rates down. 2.25 is the bottom of the bank's neutral rate. So they feel that they are not harming variable rate holders by being in this range. So it enters their consideration, but it's nowhere near a big factor.
You think people should think about perhaps locking in a fixed mortgage rate? I mean, what can people typically get on a 5-year mortgage right now?
They're all hovering, a 5-year fixed rate is all hovering around the 4% range. It might be a terrific deal like 3.89, it might be 4.09, it might be 4.19, but right around the 4% range is what most people can get a 5-year fixed for today.
And of course, that to a large extent hangs off the 10-year bond yield or the 5-year bond yield. Maybe we could put up a 5-year chart for the old 10-year Canadian bond yield. Broadly, do you think that's going to be as good as it gets on a fixed rate mortgage over the next couple of years?
Well, I think so. But you can't be sure.
No.
I'm an old man. I'm 68. I've been doing this for 30. I'm old. I've been doing this for 30 years. And I can't really remember a more volatile time in geopolitics, in the financial world. If you can imagine, we got to spend some time in the mortgage business thinking about the Japanese bond market.
Yeah.
So that tells you just how volatile this really is.
And there's been that stunning change. That's interesting. So the government, essentially, if it was to issue new bonds right now, they'd be paying just under 3% on a 5-year term, in theory anyway. But a 5-year mortgage will cost you about 4%. Is that a big spread, Ron? Are mortgages expensive in relation to bond yields, or can you generalize?
I can generally tell you that these spreads have narrowed consistently over the last 5 or 6 years. When I was first started in the business, banks were looking for about 125 spread. It seems today they're comfortable with the 1% spread. There's just added competitiveness. I know that sometimes Canadians don't think that since we have fewer banks than the U.S., we're not very competitive on some products and rates. But I can tell you that these banks are very, very sharp competitors in mortgage world.
It's interesting. I do remember years ago, there used to be mortgage funds, mutual funds in Canada. This is going back a long time. But the banks stopped offering them because it was such a juicy business. They wanted to keep it all for themselves.
That's about the best way to describe it, yes.
Because it's stable. People will do virtually anything to be kicked out of their home. And the banks don't want to even do that either.
No, they don't. We have experienced an increase in mortgage default rates in the last year. If you go back to 2021, it was the very bottom. There was only 12 basis points of 90-day default in Canada, which is a perishingly tiny number. But it's gone back up to 24 basis points, and most banks expect us to hit the more traditional 32, 34 basis point default rate within the next year. So default rates continue to rise. It's a difficult time in the real estate business in Ontario and British Columbia. Home values are down, home values continue to fall, and that puts some people in a precarious position.
And that's not just an oversupply of condos, it's generally true of home prices?
Well, I read today that we are almost, and we might be in it, we have almost gone full circle back to 2019 in Ontario house prices. Now, Ottawa's still fairly strong, but all through Southern Ontario, we're actually almost touching 2019 prices for homes, which is a big round trip. It's an incredible round trip from 2021, all-time highs, March 2022 in Ontario. And it hasn't stopped falling yet. So we have a lot to observe in the coming months.
Well, of course, the federal government has been mocked for mumbling when asked, do you want home prices to drop? And of course, observers say, well, if you want housing to be affordable, you need home prices to drop.
Yeah, Gregor Robertson's the federal housing minister's famous comment was, we will achieve affordability, but we want all Canadians to maintain the value of their homes, that's an interesting idea for sure. Yeah, that was interesting.
Ron, can I ask you to just comment on politics here? And you may want to avoid this one, but is that going to be trouble for the Ontario Conservatives if the public get ticked off with falling home prices?
I think the public understands that the provincial government has no control over home prices. I think almost everyone understands that. So I don't think that will be a major issue in any future election in Ontario, but it is definitely a factor that will make people in Ontario a little bit more unhappy with their financial situation.
Ron, always great talking to you, and thank you very much indeed.
Thanks again.
Ron Butler, mortgage broker at Butler Mortgage.